What's going on, everybody? Welcome back to Master Precision Trading. For those of you who are new, my name is Sajid, and I created this channel and page to just form a group and community of like-minded individuals who are willing to take that step into investing in themselves and investing into the future. So let's get into what today's video is about. We are going to be discussing 4 types of orders that I use on a day-to-day basis throughout my trades in the stock market. One being a market order, limit order, stop order, and a trail stop order. So let's get right into it. A market order is just a simple way of saying it's live. We will be purchasing at the price of $83.48, and that is what this stock is trading at live. Right now it's after hours, but hypothetically speaking, if a stock was trading at this price, we would come over here to active trader, or if we have hotkeys set up depending on our broker, we can go ahead and just automatically click whatever we have set on our keyboard to go ahead and buy 100 or whatever we have set at that market order, and it'll automatically go at that live price. Now, depending on your broker, it may not get executed at the proper price that you desire, just because of how fast also that the market is moving, how it's flowing. So at $83.48, when you press submit, it might get submitted at $83.50 or $83.45. It's different because it's a market order and you have to be fast with it. That's why we have hotkeys. It's very important to use the hotkeys and set that up, that it will automatically purchase right when you press it. So another thing I want to say is that Robinhood brokerage, I have an account with Robinhood and TD Ameritrade, but Robinhood, it does not execute as you wish whatsoever. I've lost many profits, and I've lost a lot of money with Robinhood because their execution is really poor. They do not execute at the proper prices or at how the market is actually moving. The prices are false a lot of the times. But that's another story for another day. Another thing I do want to say is, depending on your broker, I don't know about about Fidelity or E-Trade or Charles Schwab, but I do know on TD Ameritrade that there is a trail stop order that I will be discussing, and I know on Robinhood that trail stop order is not offered, but we'll get into that in a minute. So let's go over to the next order, which is a limit order. A limit order is simply being able to place an order at a desired price point, meaning if I want to buy in, if it's at $83.48 right now, and let's say I want to buy in at $83.40, which could be a support. If I want to get in at that $83.40 price, I can set that order and it'll execute at that or better. So if it goes to $83.39 and so on and so forth. Same thing going the other way. If I want to get in at $83.50, it will automatically submit my at $83.50 as it is at $83.48 right here. So again, the price can change just because of how fast the market moves, and depending on your Wi-Fi connection and all that other stuff. Those are other factors that take account into your orders. Another one is called a stop order, which is basically minimizing your loss. I use it if, let's say before we enter a trade, we want to have our desired price point and our desired exit point within that trade. So what that means is, if I know I want to get in at $83.50 and I want to have my risk management proper, I want to have my risk to reward ratio, because before we enter a trade, we want to make that profit. So we want to make sure that our reward is greater than our risk. We don't want our risk to be greater than our reward, because what's the point of trading that? It doesn't have any value. So if I want to get in at $83.50, I can go ahead and write it down on my notebook in my trading journal that, okay, I have this ratio, this risk to reward ratio, that actually, if it goes down, if I do get executed at $83.50, I'm okay with losing 20 cents per share. So if it goes down to $83.30, I'm okay with selling at that, and it'll sell right there. Same thing with just setting a limit order to sell. If we want it to go down by 20 cents, what do you want it to go up by? So what will it sell at for that profit for you? Will it sell at $83.70? The reward has to be greater. So I would personally sell at $83.90, 80 cents, whatever it may be, depending on my criteria and my trading plan for that day and for that stock, and not only basing my trade off of an indicator. So that's what a stop order is. It's just going to minimize our loss when it goes down to that price. So if I get it in at $83.50, it'll stop me out stop my loss with whatever I'm okay with losing at a certain price point that I set. And remember, again, that also has to do with your Wi-Fi connection and your broker and how the market is moving. But it will get in that general area. And it's very rare with TD Ameritrade that it doesn't process you on time and at that execution that you desire. So, lastly, I want to talk about a trail stop order, which is a little bit more difficult because it's hard for a lot of people to understand. And it took me a while to understand. But it's a very beautiful thing. So, let's go to a stock like TNDM, which just had earnings, by the way. So let's say TNDM always offers $3, hypothetically speaking, on a day-to-day basis, that it offers us that $3 profit margin a day. But we get in on our trade, and we want to set that cushion, a price range that we're okay that when it's going up, we have this other cushion that is trailing it. So if I get in at $34, and I know that this stock moves by $3 every day, so it could go up to $37, and even more above that, it could break that resistance. I can set a stop order to trail while the stock is moving. So that gives me that range, that movement, that potential. It gives me that opportunity to follow up with that, and I don't have to watch it live. I don't always have to pay attention, and I don't have to sell myself so short with the trade by putting a stop order on something that has that potential to keep soaring up. So instead, I'm going to set a cushion at whatever I'm okay with. So if it's at $3, it offers that $3 profit margin a day almost. Or for some stocks, it could be $1.20, whatever it may be. We can go ahead and make that assumption that I can go ahead and set that trail stop order at maybe $1 cushion or $1.50 cushion. Whereas if it will go up, and if it pulls back and it goes up again and it pulls back, it'll automatically sell at that trail stop order because it realizes that, okay, went ahead and gave us that potential, it gave us that movement, it gave us that price range action, and now it has pulled back, and it doesn't seem like it will continue to keep growing. But it's something that we don't always have to watch. If we have work, we can go ahead and set that trail stop order instead of setting it at a stop order, which is basically not giving us our best profits, and it's just giving us that loss. So let's say if TNDM, I get in at $34, but the profit margin is 3%, and let's say I'm not watching it, I just have my stop order in to cut me off at 3%, and it's soaring up, and I'm not selling because I'm not paying attention to my screen. I'm at work, or I'm whatever it may be for you guys. We all have different schedules. And it keeps going up, and it goes up to $42, and I still haven't sold because I have this stop order, and I don't have a limit order set for whatever reason. And it pulls all the way back, and it cuts me off at that stop order from 3% away from $34. Then I lose money on it. So the trail stop order is a very beautiful thing because it's trailing. It's trailing with the price, and it has that cushion that you desire. So those are the 4 orders that I use on a day-to-day basis throughout my trades: the market order, the limit order, the stop order, and the trail stop order. Very great things, very useful, and a big problem with a lot of the traders is we don't have that structure. And I always mention structure. We need to have some sort of plan. How do we go into a trade without having a plan? It's gambling. That is true gambling. That's why people are so scared of the stock market. They're so afraid of investing in the stock market because they've seen so many people lose money because they don't have that risk-reward ratio. They don't have risk management. If we don't have risk management, we don't have profit. Simple as that. We need to know when we want to get into that trade. We need to know when we want to get out. What are we okay with losing? What are we okay with gaining? Not being greedy. Taking that certain percentage that we're just aiming for. Personally, I advise that you don't aim for a certain target goal as far as a number goes, because a lot of you guys, or a lot of traders, not you guys, but a lot of traders in general, the reason why there's only 1 out of 10 every traders make it is because they focus on gaining that $50 goal or $100 goal or $1,000 goal a day, and when they don't reach that, they start to revenge trade. They say, how can I make up for that bad trade? How can I go ahead and gain that money back that I just lost? And by doing so, they hop in another trade that puts them more in red. We want to keep our portfolio and our accounts consistent. We want to keep growing them consistently green, and by doing so, keep it at a percentage, whatever you're okay with. What are your ideal trades looking like? What do you usually gain? What do you usually lose? What is it like? And from there, you can go ahead and make that idea, especially depending on the capital that you have in there. I personally like to aim anywhere from 2 to 4% per trade, but a lot of my trades are 2 to 3. I'd like to get 4. Sometimes I do. Sometimes we get that big winner stock, which is great, but we need to lock in profits and walk away, because there's been many times where I've looked and I know that it's going to reach that and it sells off and I don't lock in profits. It's happened many times, and that was when I didn't have any risk management. Have risk management, have that structure, and you'll be way more consistent. Your portfolio will be more green, and you'll be more pleased as a trader. You'll feel more confident. Being a trader is all about building up that confidence, building up that discipline, and just overall that structure in our life. So again, guys, I really do appreciate your guys' time as always. Thank you for tuning in to Master Precision Trading. If you guys have any questions, feel free to direct message me on Instagram. Leave them down in the comment section below. And don't forget to subscribe and turn on the post notifications, simply because you don't want to miss out on the great content, the quality content, the knowledge that I'm providing, and the knowledge that I've gained, that I'm trying to spread awareness to about the opportunity that we all have. If I have the opportunity, so do you. The market is there. It's a free market for us that we can trade in, and it's a beautiful thing. So let's take advantage of it. Let's get after it. I hope you guys all had a safe Halloween, and tomorrow is the last trading day of the week, November 2nd. So let's make it happen. Let's stay consistent. Let's stay green and lock in the profits. Like always, guys, I appreciate your guys' times. I hope I summed it up for you guys. So if you have any questions, feel free to email me, contact me, Instagram, direct message, all that good stuff. So like always, thank you. Later, traders.